All right. Are you serious? I welcome everybody. He's back. That's right. I'm talking about Colin Plume, the CEO of NobleGoldInvestment.com. Colin, it's great to have you again today.
So good to be here. So much happening in the news after the long weekend. Obviously, God bless America. Great weekend. I watched I love watching all these, different airplane weekends, all these different memorial things that were happening. So just an amazing country. We're so lucky to be living here.
We really are. We really are. I was watching, of course, we had the Indianapolis 500.
Right.
The Indianapolis 500 was happening, and that was really neat because it's the 250-year anniversary of the U.S. Army.
Mm-hmm.
So they were really doing a great job with that whole presentation. So it was really, really good.
Yeah, spectacular weekend. Yeah. I had a good weekend too. Actually, we went to celebrate. We went to a dude ranch. I took my family, and it was just an amazing, shotguns, rode horses.
Wow.
Straight out of Teddy Roosevelt time.
Yeah.
And the dude ranch is one of the great things about this country that we have. That in the late 1800s, these ranches started to let people come and experience, and it's this tradition that we really need to keep on. And we were out in Colorado in this just spectacular valley that these two really smart people bought 8,000 acres, and they have this ranch and horses, and we rode horses and shot guns, and it was great. Even I got my first time my 6-year-old twins to shoot a little bit, these little pistols, they're little shooters, which is really fun. And my 8-year-old also shot a little bit, and he hit a few clay. We did some clay shootings. He hit a few, and
wow.
But I wanted them to experience this, and
yeah,
because I just think it's a great part of our culture.
It is. It really is. And I'm glad you took the time to do that with your boys and kids and family, so that's really neat. Well, let's talk about some of the stuff that's going on, Colin. I mean, tariffs and more tariffs.
Yeah.
This is affecting a global world in many different directions, I guess.
Yeah. I mean, I think that when you look at, the tariff inflation, and you look at President Trump and sort of Jerome Powell, the thing that I don't understand is if you look at, there's a great website called Trueflation, and it talks about actual inflationary numbers. And based on their numbers, inflation is about 2.1%. So actual inflation is down, but Powell and Trump are unfortunately in a pissing match, and they should be lowering rates. They should have done it already, but they're not, because he called for the resignation of his job. They're working hand in hand. He wants them to step down, but he's not going anywhere. He's in office, I think, until February of next year. Yep. So you probably have no rates lowering, which in a normal environment, when you see inflation going down, you would see rates start to go down. I think that would ease a lot of things that are happening out there. So we're kind of in a no-win scenario right now, unfortunately. And, if you look at, when you look at GDP growth, rates are a part of that. Businesses need money to grow and expand. And right now they just, they don't feel comfortable doing that.
Well, they're afraid to raise their credit line and to borrow money to put into capital in their business at these interest rates. They don't want to do that.
Yeah. It's the Fed has basically said that they're not going to help us, that they're not going to do their job at this point. And because, and it doesn't make any sense at this point. I mean, I think ultimately everybody wins with rates going down at this point. Yep. The bond market had a massive sell-off last weekend, scary sell-off in the markets. People are just not buying bonds. They don't know what to do. And so, I mean, I think ultimately you have these scenarios going on where you have these two big parties that need to come together. I mean, they need to come together. Powell and Trump need to come together.
They really do.
They need to find a happy medium so that rates can come down, because
that rate should at least come down probably during the rest of this year 1%.
Correct. Yeah, I would say yeah, 1 or 2 cuts this year would be great. Because you can see the proof is in the pudding. I mean, if you look at, let's go into real estate now. I mean, this total apocalypse in real estate is happening. I mean, you're looking at it's coming out that the first time home buyer age is now 38 years old from 30 years old. So that's not good. And in 2008 it was 30, and now it's 38 years old today. The median age, so not the first time buyer, but the average age home buyer right now is 56 years old. So how do you have a growing economy? How do you people get out of the world and feel comfortable when they have this massive gap of what they can do and what they can afford? So they can't get a piece of that American dream right now. No, it's too expensive. They can't afford it. And so you see people just stuck. They're just stuck. So what are they going to do? What are they going to invest into? They don't feel great about the stock market. They want a tangible investment. And obviously we've seen a massive boom in gold, silver, platinum. Platinum is really undervalued. Because people do want to buy physical investment. And if they're going to be priced out of the market because of interest rates, because of prices, I think it's putting them into a position where they can't afford it. The average median home price in the country now is $403,000. Most people can't afford that price.
And especially in a lot of parts of the country, the wages are not at the level that people can maintain a mortgage of over $400,000.
Right. Well, and also if you think about it, if businesses can't get credit and grow and expand, then also someone's not going to feel comfortable to do a 30-year mortgage, right? Because their job may not be in a great place.
Right.
We know AI is replacing a lot of things here. So we do need to get prices, mortgage rates down for a lot of different reasons, so people can get their foot in the door. And then you have people that, they have these golden handcuffs because they, like all the people that have these 3% mortgages, they're never going to sell.
They're not going to sell.
There's no reason for them to move. There's no reason for them to do anything. So you have all these people that are just never going to move. We do have a supply where they need more homes, they need more inventory, but anyone in that 3% mortgage, they're not going to sell because they're just going to trade into a house at a higher rate. I mean, it doesn't make sense for them.
No.
So you have this real deficit of people that want to buy. You have a deficit. Builders are slowing down their building right now. They're at historic lows in terms of building new product. So you have this real problem happening right now. And then and you add on top of all this with the tariffs and everything that's happening, the cost of lumber and the cost of everything has gone up. So the houses are gonna be worth more, but there has to be a little bit of a push here to allow people to afford it. So I think if we can get rates down, if we can get rates in the 5s, in the low 5s, high 4s, I think the market just takes off. I think we see a whole new market happening, but in the 6.25% to 7% range, based on a $403,000 median home price, it's tough. I mean, basically, the mortgage price your mortgage is going to be double than what it was 3 years ago, and I don't think anybody can afford double. It's just not a price that people can afford. So they're going to continue to rent. And they're going to continue to wait, and there's just going to be this waiting game until things shift, right? So it's draining the economy in a million ways because you have the whole real estate sector really struggling. People that are in the sector selling, buying, leasing. I mean, everybody is really hurting because they just don't know what to do. And I blame Powell. I honestly blame Powell. Now, last year when inflation was going up, and the year before, and he was being a little bit more reserved on it, it made sense. I mean, obviously we saw 9% inflation a few years ago, so he had to pivot at that time. But now I think it's just ego.
With inflation down to 2.1, why is interest rates at 6.3?
Yeah, I mean, it doesn't make any sense.
I really think he's just not wanting to work with Trump. This is a political move.
Yeah.
It's the country, and he's just going to ride it out till he leaves.
Yeah, and he figures like, I'm guaranteed, my job until February. I'm out after that point anyway. I might as well just, protect. And then, these kind of guys, the pensions and different things that they have going on. I mean, he's going to get paid, I'm sure he's going to get paid forever. So what does he ultimately care? But I do think that the world is sort of feeling this, and it's creating this, underground economy. And so what's happening, a lot of the world's having similar problems, debt problems. But what we're seeing is happening is that with sanctions happening in different parts with, Russia and different parts of the world, there's this underground market. So basically what's happening is you have China, Russia, Iran, all these countries stockpiling gold. People don't realize that there's been an incredible buying of gold over the last 3 or 4 years. And it's basically because they're looking to dodge U.S. sanctions. And so you've seen these massive trades. Russia and Iran have done it. China and Russia have done it, where they trade either oil or other things with gold. So they've created it through the blockchain. And so they've created this, it's almost like a sanction resistant economy. And so,
they're operating outside of the U.S. global market or global economy by just bartering gold for oil or for wheat or barley.
Yeah, and this is the problem with us getting involved in too many countries and too many conflicts, is that we isolate ourselves. And now we've sort of isolated ourselves. And so these countries are creating these blockchain gold-backed systems where they're trading outside of it. And they're going to continue to do that. And we've talked a lot about the BRIC nations doing this too.
Yeah.
But this is going to continue to happen. And I think that as we see this evolve more and more, they're realizing, listen, the dollar is not great. We're not comfortable with the dollar. We're not safe. Gold makes a lot more sense. Continue to buy gold. And I've seen reports. Listen, Robert Kiyosaki, maybe he's a little out there.
Yeah.
He was on last week. I saw him in multiple places. He's thinking gold at $25,000 an ounce. Now,
what?
Yeah, I mean, that's what he's saying. And listen, he's been pretty right on. I mean, he predicted $3,000 gold a year and a half ago. He's predicted a lot of these things.
Yeah.
So if you're a country like Russia, like China, like Iran, like Poland last year, if you have the option to buy gold at $3,200 an ounce today, and you really believe over the next 5, 10, 15 years, gold can hit $15,000 or $20,000 an ounce, of course, it makes sense for you to buy gold today, to continue to hold it. And so we've seen just big shifts, big waves of just different buyers. And at Noble Gold, we're seeing a lot of younger buyers that I've never seen before. I think we've talked about it before. Our average buyer age was in the mid 40s
to 50.
And it's shifting over the last 6 months. We're seeing like early 40s. We're seeing in the mid 30s, a lot of people that have left government jobs, that have TSPs or old 401ks. A lot of people that are younger are sort of seing the benefit. They don't want to go all in on the stock market. They want something different. They're looking for a hedge. If you follow the big money, follow these countries, the fact that they're continuing to buy gold, this 1,000 tons a year, multiple years in a row, and they're on pace to do it again this year, it kind of says that there's something to this market, that it's not going anywhere anytime soon. And I do think, Pastor Paul, and you probably remember this, is that the last big gold bull market was 2001 to 2011. And gold went from $280 an ounce to $1,900 an ounce in 10 years. And it was really a 10-year bull run. If you think about this most recent bull run, it's about 3.5 or 4 years. So we're sort of in the middle of the beginning of this bull run.
Do you think the bull run will go as high as maybe $4,500 an ounce, maybe $5,000 an ounce?
I don't think there's any reason why it couldn't go to $5,000 an ounce. I think that if you have to look at what's going to happen over the next 1 to 2 years. You have the most recent bill that passed, which is a tax savings bill, but also, I think I've talked a lot about this with President Trump. Is I think that he's creating this. You have to spend money to make money, and so his idea is to lower taxes to get the economy moving. They've talked about the Republican Party's talked about that this new bill they think will increase the GDP to over 5%. But if you look at it just on face value, it's creating a tremendous amount of debt for the government.
Right.
So what is the natural reaction to lots of debt and government spending and the dollar losing value? That would be gold. So, they are taking a bet on lowering taxes to stimulate, right? That's the idea, is to get more money moving in the economy because it's been stagnant. We haven't seen a lot of movement. People aren't willing to invest. So they're taking that bold bet. But with that bold bet, you're looking at a lot of government spending, a lot of government debt, a lot of dollar devaluation. So it's not a strategy of cutting, expenses enough. Now, DOGE has tried to cut, and they're cutting things, but it's really a drop in the bucket in terms of the grand scheme of how much they would really need to cut to get our debt. So the goal of this strategy is really like get the economy so businesses are hiring and we keep unemployment low and we're spending and they're investing in the US, the sanctions, we're spending money here. And then in the end, hopefully we can pay off some of this government debt that we're creating. But we are creating a lot of debt.
I mean, even with the big, beautiful bill, it's really a spending bill. I mean, there's some cuts down the road, but it's 10 years.
10 years, correct. Yeah.
So look, Trump's out of office in 3. You don't know what they're going to do after that. Is it the Democrat in charge? Is it a Republican? We don't know. The philosophies can change. So, I mean, really, this is there's no cutting. I mean, yeah, DOGE is cutting, but the big picture, it's not enough. No.
Yeah, no, it's not enough. I mean, it's really a way to you couple it with the tariffs and the idea that we need to start adding, it's really a way to help owners create more opportunities here in the US. It's just another way to do it. The other thing that's in there that I got a glimpse of about 2 months ago from Charlie Kirk, he was talking about this, was they want to create this $1,000 taxpayer bill for children. Did you hear about this?
I heard something about that. Yes. I didn't hear the dollar amount. Yeah.
Yeah. It's really a cool idea. So basically you, as a newborn, the government would put $1,000 into a tax, like an IRA.
Okay.
And but it's held by the government and it's in the stock market.
I got you.
And so the idea is that, and anyone can add to it. So instead of I love this idea. So instead of your family members giving you toys that you don't need or junk,
put money in your fund.
They dump it in your fund. Right. Exactly. And a lot of really smart business people, a lot of stock guys have thrown this idea around, but this is the first time I've kind of seen it coming to fruition. And the idea is that instead of like waiting for Social Security or waiting, is that at 18, you would get this, you'd have access to this fund.
Right.
But if you decide, it just continues to grow tax-free.
And you let it build up tax-free. That's key.
Tax-free. Yeah. And really it's it's the thing that I do. I do it in this form too. I do it with gold and silver. I sock away every quarter. I have some for Sharon and I have some for the kids that I sock away. Yeah. And it's just the same idea. You're just kind of growing at a young age. It's just so much easier to add a little bit over time than add big chunks. And so I think that's the idea of this. So that's out of this tax bill. That's one of the, in my opinion, one of the shining lights for the future is creating this kind of incentive. Because I think if you look at what this account could do for somebody, and also just the idea of planting that seed to a young person that, hey, you're going to get this money at 18. You can't touch it, but at 18, you're going to get it. And look what it's done. And so you start to get them the idea of investing at a younger age, which I think is really the most important aspect of it. Yeah, the money, whatever it ends up being, maybe it ends up being 50,000 or 100,000 or whatever it ends up being at 18. But then they're going to start to think about it. They're going to look, they're going to get a statement. And it's going to say, hey, you got $20,000, 30. And, oh, that's my money. Yeah, well, look how it's growing over time. So I think that's one of the best parts of that bill. But yeah, obviously they're saying it could add $3.7 trillion in new debt over 10 years. So, it's a pretty significant amount of debt that we're going to add to the books. And listen, I hope that it does everything that we think it's going to do. And It's going to invigorate the economy and get people spending again, because
that's very important.
We need it. We absolutely need it. I don't know what you're seeing out there, but people I'm talking to are just in a holding pattern.
They're in a holding pattern. That is exactly the situation. And the housing market is kind of froze, because if you've got a home at 3% interest, you're not motivated to sell, and the buyers can't buy because they got to pay a 6% mortgage interest rate. So everybody's stuck, and that's affecting. And also taxes, property taxes keep going up. Insurance, a lot of these insurance companies are no longer covering people's homes, especially if they're in a fire area. Or they're in a flood area, or they're looking out of these, actuaries.
Actuarials. Yeah.
And they're seeing the patterns of the weather changing. So all of this is affecting people.
Well, yeah. I mean, if you look at the Los Angeles fires, and I know people that had homes in both places, Palisades and the Eaton fire, both locations. A lot of them are saying they don't want to move back to their homes because they can't afford just the insurance costs.
Right.
The insurance cost is so astronomical to even get back. And you have to think, like, the risk is, I would say, much lower, because they're building homes that are more fireproof, and they're trying to put themselves in a much better position. But the insurance companies are just seeing red flags all over the place, and they're just not willing to do it. And then you have the California Fair Plan, which is like the safe. That's the last resort insurance.
And that only covers about half, or maybe?
It covers about half. It doesn't cover any of your contents, and it doesn't cover any like loss of use, which would be like you having to live in another place. So it's very bare bones. It's not policies that anybody that has, any kind of common sense would ever want, but you're sort of forced into that situation. I've talked to people that, had homes that they only have half the coverage. And so they're, and obviously to rebuild has gone up pretty dramatically. They're anticipating in the Palisades that it could cost between $900 and $1,000 a foot to rebuild some of these homes. So, and a lot of people were insured for $500 to $600 a foot, because that's where it kind of used to be, right? I mean, so you have these situations. So everything's just, and everything's getting more expensive. Everything's becoming more difficult for people. And so this is the problem in today's economy, is like, where do you pivot as an investor? What's sort of the safe play? What's the hedge? And, more and more this year, I think I've heard more people talk about this, is that gold has really become the everything hedge. It's really become that for people. And then silver is the rocket ship potential. That's the one that, has lagged behind. It's kind of been the slow horse of the race. And
think it's going to, it's what is it, around 32, 33?
Correct. Yeah.
But it's not even hit its ceiling. I think its ceiling was at once 50.
50, correct. Yeah. And if you look at inflationary numbers from 1983 and you look at it today, silver should be sitting in the 70s.
Yeah.
You take the same dollars today. So those are the numbers that I look at. So yeah, listen, we've done great. We've had investors that have done just absolutely fantastic in gold. But there, a lot of people are jumping on the silver bandwagon, and then platinum, I think, is interesting right now too.
Got your book right there. Silver is the New Oil, folks.
Yep.
Right there. And Colin, tell them a little bit about the book and how it really helps people to understand.
Yeah, well, there's so many books about gold, and so I wanted to write a book about the opportunity in silver, and I wanted to do, really learn more about silver in a way that I hadn't learned about. So I spent a long time, over a year, really researching and looking at the markets, and just was absolutely flabbergasted to all the different types of uses of silver that I was unaware of. I go through a lot of those in the book, and I kind of label uses, and I think people will get a kick out of that part. The government obviously has tremendous use for silver. But I think that the thing that I looked at more than anything is you really have to get physical assets in this new world, the new economy. That's really the theme of the book. It's the theme that I live by. I really own physical assets. The majority of my net worth is in, businesses, precious metals, real estate. These are the things that I trust and understand. because I think that the new economy where when the reset happens, you're going to want to have real assets. You're not going to want to be tied into digital assets. You're not going to be tied into crypto. It's really important to have things that, and it's basic. It's a basic idea, but you want to have.
It's better than having fiat money for sure.
Correct.
And digital, because that's still out there in cyberspace. But physical land, physical gold, platinum. I mean, silver, platinum. Tell us a little bit about platinum.
Yeah. I mean, platinum. A lot of catalytic converters. The Platinum World Council just came out with a report that they think platinum's going to hit $1,500-$1,600 range in the near future. Platinum's more rare than gold and silver and palladium. So if you don't own any, I highly recommend getting some platinum. But I think the idea of, you see the World Economic Forum and all these groups, these really rich groups that have been trying to brainwash people into renting and borrowing and leasing and all these things. And at some point you start to listen to it and you go, okay, is there something to it? But then you look at today, it's like people can't afford to buy homes where, a few years ago, they waited, they had an opportunity, they could have bought a home that, and they'd have a piece of that pie, right? They have that American dream that everybody wants. So it's like the sooner you can get into physical assets, the better. And I just think what we're going to see happen, in my opinion, is people that bought gold and silver from us are going to hold for the next few years, make a lot of money, and then the real estate market will turn around, and a lot of them will be able to take that wealth and move from one physical asset to another. So I think that'll be a great opportunity for them.
That's exactly. Folks, go right now to www.pastorpaulgold.com. That's pastorpaulgold.com, or pick up the phone and call them right now at 877-646-5347. Let Noble Gold help you. You've got gold bars, you've got gold coins, you got silver.
Correct.
Or a lot of folks don't know how to roll over a 401k into a gold or silver IRA. Can you guys help pretty easy with that?
Yeah, I mean, you could literally do the whole everything we need within 5 minutes. We have a form on our website. We've streamlined it down. You could get the ball rolling, have it, and then let us go to work, because we will help you contact your custodian, help you fill out the paperwork. We have a full IRA team. So it takes 5 minutes. All you need is basically just a copy of a statement, or online. You can go online. So we need some basic information, but we roll it over from one qualified account to another. We help you through all that. There's no taxes. Everything is rolled over from one qualified account to another qualified account. And then we help you acquire gold, silver, platinum, palladium, but ultimately you decide. And it's bullion, coins, and bars. This is exactly what the central banks are buying. This is what the institutions are buying. And I forgot to mention what's happening, right? It's a very easy process, but the Basel III, the banking laws are shifting in July of this year. So Basel III is basically, these are the international banking laws.
Yeah.
And 3 years ago, they passed a law that gold will be a tier 1, go from a tier 3 to a tier 1 asset in July of this year. So that's really important for people to know. So tier 3 asset would be a pretty risky asset. Tier 1 means a no risk asset.
No risk.
So 3 years ago, this banking group realized that, I mean, they were ahead of the game, obviously. They realized that gold's, going to be a very stable, good asset. So now banks like Citigroup and Bank of America and all these big banks can hold gold in reserve and lend and borrow against it and do all the things they normally do, because it's seen as a very stable asset. So not only are you seeing the central banks, but you're going to see institutional banks in July start to acquire gold because it's going to look good on their balance sheet. And that's going to be really important. And I think with all the bond sell-offs and all the, things that are happening with banks, and we've seen banks collapse, they're going to want to have some gold in reserve as opposed to being so hedged with bonds. So it's actually great for the banks that they have this opportunity, because they can diversify, because, they need to be in stable assets. They're obviously taking your money, they're loaning a lot of it, and then they're investing a lot of it. And so they didn't have gold, physical gold, as an option. And when you look at the Basel law, when you read into it, the interesting thing is it specifically states it cannot be paper gold, can't be derivative gold. It has to be physical gold. So you have the central banks buying, you have the institutions that are now going to be jumping into the market in July. So there's a whole new group of buyers that we've never seen before that are going to be jumping in the market. So I anticipate big things for gold. Yeah, it's going to be huge. And you're starting to see Jamie Dimon and all these guys are starting, they're in these meetings, they're talking about gold. So I think it's going to be pretty exciting to see that happen. And, these are institutions that are going to add to these central banks buying, 1,000 tons a year. There's only so much gold above ground, right? So, they're going to be pulling this out of the market. And I think you're going to see a pretty massive supply shock over the next few months, which is a little unusual in the summer. But I think with this law passing and mandating in July, you're going to see a whole new group of buyers.
Well, and so because it's really interesting, you're looking at gold right now. I don't know, it's around 3,200, 3,300, somewhere in there, an ounce. And you think, man, that's. Do I really want to jump in now at that? It go back down, but no. If you look at the trend, you look at where everything is going, and nations are almost wanting to go to a gold standard,
right? Correct.
Currencies. America might even do it. Who knows? That we used to, but either way, the fact that the physical gold, and folks, you can get physical gold right now. You can pick up the phone. You can call Noble Gold at 877-646-5347, or go to PastorPaulGold.com and fill out that, rolling over that 401k, that IRA. Maybe take some of your savings account and diversify. You don't have to put it all in gold or silver, but maybe take 15%, 25% and shift it. Yeah, would you recommend that?
Yeah, I mean, and I think what's happening is, the nice thing is gold is so liquid. So, people that are buying from us today are going to, they're going to ride out this real estate, catastrophe that's happening. They're going to ride out what's happening in the stock market, because it just, we've had so many volatile days. And I think a lot of people, they don't want that kind of volatility with all of their money. Right. And to your point, gold has moved like a stair step over the last, 20 years. It typically goes up, it hits a floor, it goes up, it hits a floor. So it does seem like we're in that kind of early bull market. And so I think that's something to really keep in mind. We haven't seen the net selling that we saw in the early 2000s. There was a lot of central banks that sold in the early 2000s. We're not seeing that. It's just buying and accumulating. And so the more that you see of that, and now you have this whole new group of banks, they're going to be buying gold. It's pretty telling of what's going to happen. And I think that with everything in the horizon, with inflation, with spending, with everything, gold looks at a safe haven in those kind of environments. And, I think the one thing that's been interesting for me I've been doing this for 16 years, is that the one thing that always people will say is like, oh, it doesn't pay a dividend. Gold doesn't pay a dividend. But when you look at the returns, this year we're at 13%. If you go back a year and a half ago, you're at almost 40%. You don't need a dividend when you're making 40%, right? I mean, ultimately it's, and that's always been the thing. But then I talk to people now about their dividends. Everyone's dividends are down. Everyone's real estate is way down.
Way down.
So where are the dividends now? Not only are they not getting a dividend, but their property values are going down. So they're getting hit twice. So I think that people fell in love with this idea with these dividends and these, the real estate. And listen, it'll bounce back eventually, but it's going to take some time, and there's going to be some pain. This year's going to be a lot of sell-offs. A lot of people are in trouble. A lot of office buildings are just selling off market. Just the banks are just dumping stuff. And that usually doesn't go away right away. So I would say we have a good 12 to 18 months of real estate pain that's going to happen. And then, hopefully things will bounce back.
Well, that's our hope. And we believe that America's always been so resilient. We always seem to but what we have to do is be intelligent. And that's why it's so important to learn about the economy and learn and let Noble Gold help you with that. You can call and say, look, here's my life cycle. Here's how old I am. Here's where I'm at. I'm thinking about making some moves. I need to know what to do. Get a little bit of advice and help. And they can do that at Noble Gold and help you secure some of your assets in a precious metal like gold or silver. And then when things correct, you'll be on top. And that's kind of how you look at it. So
it's absolutely right. Yeah, it's a it's a duck and cover strategy right now, right? I mean,
Yep. You
gotta keep moving, and I think the most important thing is get some information from us, learn about what we do, talk to somebody.
Yep.
Everybody at Noble Gold loves precious metals. This is what we do every day. This is what we live and breathe. So get some good information from us, and ultimately you can decide what's good for you. We can store it for you if you want, or we can ship it to your doorstep. We can do it however you want. We're shipping right now in about a week, so you can have the gold and silver in your hand pretty quickly. So give us a call. And as always, Pastor Paul, thank you. Appreciate, our partnership. And it's good to get on here and talk to people about what's happening and get your perspective and learn. And so it's always fun to get on and chat about these things.
Appreciate it very much. Thank you, Colin.
Thanks,
so
Pastor
guys,
Paul.
do this. Go right now to PastorPaulGold.com or call them right now at 877-646-5347. Tell them Pastor Paul sent you there. Tell that guy on the phone. Okay. God bless you, Colin. I'll see you.
Thank you.